Hey there, everybody. Thomas Wood with Basecamp Trading. It is Thursday, May 4th, and we're going to take a look at crude oil and continue on with our price action series. And today the topic we're going to be talking about is a setup that, if you've been a member here at Basecamp, you know we've been talking about it for the past several weeks. And then it triggered earlier this week and has so far followed through really well. So for everybody that's a member, great job, you're making money. For those of you that are not members, I'm going to break it down for you so you can see what the setup was and how we use drill down analysis. We're going from a longer time frame to a shorter time frame to lower risk and increase reward, which in turn gets you a better reward risk ratio and makes it easier to be a long-term profitable trader. So with crude oil here, you remember a couple days ago we talked about the pennant breakout on that 120-minute price chart. Now crude has proceeded to fall through the floor here very nicely. I mean, the pennant breakout was at about 48.60, and right now you can see we're at 45.50. So you're talking 3.1 points. So $3,100 a contract worth of a move over the past 2 days. Now, the interesting thing about crude, and the reason we were expecting this move here, and the reason we've been watching for crude to sell off like this, is due to a couple of things. First, relative value. If you look at what RBOB and heating oil have done, RBOB, heating oil, and crude, and Brent crude, they're all pretty closely correlated, but RBOB and heating oil have been taking a nosedive the past few weeks, and crude's been holding on. It's moved down, but it's moved down much slower rate than RBOB and heating oil. So we wanted to see it catch up because crude oil was overvalued compared to those. Same thing's happening right now, by the way, with platinum and silver and gold. Platinum and silver have been taking a nosedive. Gold's been hanging on pretty good. It's time for gold to start to catch up to platinum and silver. So either platinum and silver need to be rising or gold needs to be selling off at a faster rate. But back on track here. The reason this was a good setup and we expected a bigger down move was not only because of the relative value, but if you use drill down, that means you go from a longer time frame chart to find a setup, and then you go down to a shorter time frame chart to time your entry. Well, if we do that and we go look at our weekly price chart, we had the pennant breakout on the 120s, but at the same time, we had this pennant breakout here on the weeklies. Now, we had a pennant because we had a narrowing range. The trend line that we broke through this week, past couple of days, was broken. It had been tested 3 times previously, 1, 2, 3 different times. And you can see here, we broke right through that. Well, when we break through a support level on the weeklies, just like with the 120s, we look for a move down to the next support level. So what do? You look at where your next support levels are going to be. First support was at 47.47. We obviously blew right through that. Second support was 45.92. We've obviously gotten through that. Then the last little bit of support we're going to have here, or the next little bit of support, is at 44.70 basically. So we're looking for crude to continue to come down. Now with that being said, we look at the long time frame, we go, okay, we have a much bigger move. So instead of taking that 120-minute chart and going for a quick $1,000 a contract trade, we look at the weekly and say, well, because the weeklies are breaking out at the same time that the 120-minute chart is breaking out, we can actually look for a weekly price target based off of the 120-minute setup. So we minimize our risk because we're entering off the 120, but we maximize our return because we're exiting based off of a weekly. See how that works? So we're increasing returns, minimizing risk. And then we look at this and we say, all right, now that we have gotten really extended here, because we dropped through the floor today. I mean, today alone, we went from a high of nearly 48 to 45.5. So you're down 2.5 points. So that would mean, okay, time to start trailing our stop down behind it, because we're about a point away from, or a little less than a point away from the next support level. We're getting really extended. So we want to lock in some of those gains and trail your stop down behind it. The way you do that is you go down to something like a 30-minute price chart or a 60-minute price chart, and you trail your stop behind each consecutive bar's high. So for example, as it dropped, you'd be going trailing your stop right behind each bar's high. That way, as long as it continues to run, you stay in it. But if it starts to pop back up, you get right back out. So that's all I have for you for today. I hope it helped. Don't forget to click that subscribe button. It'll pop up in the bottom right-hand corner of your screen here. And that way you can get the new videos every single day when we post them. Also, if you look in the bottom left-hand corner, there is a link to other videos talking about price action, so you can learn more about price action trading and how it works. That's it for today. in the subscription or in the link at the bottom, you can get a $7 trial of Basecamp trading, so you can come check it out in the trading room, see what the end of day videos are, see these setups as they're developing instead of after they've happened, so you can be trading them as well. So that's it for today. Have a good one. Until next time, happy trading.